Good day, ladies and gentlemen. Welcome to this latest edition of BCAS Tax Guru Cool. Over the past few months, we have been trying at our taxation committee of the BCAS to bring to our viewers videos containing information, knowledge, and a little bit of experience on various issues relating to direct taxation. In this edition, I would like to speak to all of you about a very important aspect of Income Tax Act, which has been there for several years, but which has so far not been taken very seriously, both by the Income Tax Department as well as by the taxpayers. I would like to talk to you about prosecution. Prosecution is in addition to tax, interest, penalty, fines, etc. And it is a last resort or the last weapon in the hands of the Income Tax Department to wield against taxpayers who willfully default on certain aspects of the Income Tax Act. In the Income Tax Act, there is a chapter 22 which has 14 sections. Yes, 14 sections talking about prosecution under various situations, and in most cases, the taxpayer, if found guilty, can be punished with rigorous imprisonment. And therefore, let me first take you through the various sections which talk about prosecution, and then we will talk about why we are having this particular video specifically dedicated to prosecution. The first section which deals with prosecution is section 275A. And under this section, if a person contravenes any order made under section 132(1) or 132(3) of the Income Tax Act, in case of a search and seizure, then that person can be prosecuted. Another section, 275B, capital B, where if there is a failure to afford necessary facility to an authorized officer of the Income Tax Department to inspect books of account or other documents as laid down under section 132(1) subclause 2B. If there is a failure on the part of the taxpayer on this front, then he or she can be prosecuted under section 275B. Another very dangerous section is 276, where a prosecution proceeding can be launched for against a person who is guilty of removal, concealment, transfer, or delivery of property with a view to thwart any tax recovery proceedings initiated by the Income Tax Department. Then we have capital 276A, where if there is a failure to comply with the provisions of section 178 subsection 1 and 178 subsection 3, which is in the case of a company which is in liquidation. We have 276AB, which deals with failure to comply with the provisions of section 269UC, 269UE, and 269UL in case of purchase of properties by the Government of India. Then we have 276B, which deals with failure to pay to the credit of the central government any TDS or tax deducted at source under chapter 17B, or tax payable under section 1150, which as you all know would be the dividend distribution tax, or tax payable under second proviso to section 194B. Then we have 276BB, which deals with failure to pay tax collected under the provisions of section 206C. So 276B and 276BB deal with prosecution in matters of defaults in the TDS or the TCS provisions. Then we have 276 capital C subsection 1, which is one of the most dreaded sections, where if there is a willful attempt to evade tax, penalty or interest, or if there is underreporting of income, then prosecution can be launched under section 276 capital C. And this is a non-cognizable offence under section 279 capital A. And it's divided into two parts, where the first part talks about where the tax which is sought to be evaded exceeds rupees 25 lakhs, and the other part deals with all other cases, that is cases where tax sought to be evaded does not exceed 25 lakhs and any other matter. We also have 276 capital C subsection 2, which deals with a willful attempt to evade payment of any tax, penalty or interest. Again, this is a non-cognizable offence, and the punishment which the defaulter can be meted out by the government can range from anywhere between 3 months to 2 years of rigorous imprisonment. 276 triple C deals with failure to furnish within the due time limit the return of total income required to be furnished by notice under section 158 BC clause A. Here the punishment that can be given to the defaulter can range from 3 months to 3 years of rigorous imprisonment. 276 capital D talks about prosecution that can be launched for failure or willful failure to produce accounts and documents under section 142(1) or to comply with a notice under section 142 subsection 2A. So this is dealing with those cases where a taxpayer receives a scrutiny notice and he or she does not produce his accounts or any other documents which the tax officer has asked for. Then if the default is willful, then this person can be prosecuted and a punishment of up to 1 year of rigorous imprisonment can be given to such a person. Section 277 talks about false statement being given by a taxpayer in the verification, or if he is guilty of delivering any false account, etc., then this too is a non-cognizable offence, and where the tax impact exceeds 25 lakhs, then the punishment can be anywhere between 6 months to 7 years of rigorous imprisonment. And in any other case, the punishment can be between 3 months to 2 years of rigorous imprisonment. The list continues. Section 277 capital A deals with falsification of books of account or documents, etc., to enable any other person to evade any tax, penalty or interest chargeable or leviable under the Income Tax Act. So if the Income Tax Department raids someone and finds that he or she is providing any false bills, hawala entries, etc., to accommodate other people and allow the other people to evade tax, then that person can be prosecuted under section 277 capital A, and the punishment that can be given to such a person, if found guilty obviously, can be anywhere between 3 months to 2 years of rigorous imprisonment. Section 278 deals with abatement of false return, account, statement or declaration relating to any income chargeable to tax. Again, this too is a non-cognizable offence, and the punishment can range between 6 months to 7 years of rigorous imprisonment. So these were the various sections, 14 sections of the Income Tax Act, dealing with different scenarios where different types of punishment can be meted out to defaulters if they are found guilty, and they can be prosecuted and put behind bars. Now, why are we talking about this suddenly? As mentioned earlier, these sections have been there for many years now on the Income Tax Act. They are not new. However, till very recently, these sections were very seldomly used. We have hardly come across any instance where a tax defaulter has been prosecuted and put behind bars. So far, the prosecution proceedings were limited to tedious defaults, but in the last 2-3 years, the Central Board of Direct Taxes, that is the CBDT, has been continuously and regularly following up with its officers to take coercive action and enforce the resultant consequences such as recovery of tax, interest, penalty, and to launch prosecution proceedings on various defaulters. On 7th March 2017, the then chairman of the CBDT wrote a letter, and in that letter, a paragraph which I would like to read went as under: prosecution and compounding are important areas against tax evaders and non-compliant assessees and cannot be allowed to be ignored. As we are in the last month of the current financial year, I would appreciate if you could put in your best and expedite filing of prosecution complaints and disposal of compounding applications. So in March 2017, about 2 years back, the CBDT chairman asked his officers to expedite the filing of prosecution complaints and disposal of compounding applications. Thereafter, again in 2017, on 6th December, the CBDT chairman wrote out another letter to the officers, and I quote, he mentioned that you are therefore requested to take all measures to step up collections from arrear and current demand. Recovery surveys should be carried out in large number of suitable cases after due diligence. The powers of attachment and sale of immobile property should be invoked to effect recoveries where regular measures to recover the demand have not been successful. And more importantly, now I quote, even prosecuting under section 276C subsection 2 should be invoked where demand is not being paid without any justifiable reason. Revenue yielding non-time barring scrutiny cases should also be completed now so that the demand so raised is partly collected in the current financial year itself. So while both these letters, the intent of the CBDT has been very clearly brought out to the officers of the Income Tax Department, and mind you, the Income Tax Department, the officers are bound to follow the diktat of the CBDT, and therefore there has been a large number of prosecution notices which have been issued. Of course, on the positive front, several of these notices have resulted in many defaulters coming forward for settlement of tax disputes through the compounding process. In the past 3 years, it has been noted that the cases of compounding of offences have increased several-fold. In cases of serious defaults, however, as per clear directions of the government, prosecution has been launched on the defaulters, and therefore the cases of launch of prosecution have almost doubled in the past 3 years. And the government has been bringing out statistics, and in the letters that I mentioned, also the statistics have been mentioned. During the last year, several prosecution proceedings have been initiated by the department for the smallest of defaults like non-filing of return, non-payment of taxes or TDS. And while we have no grievance against action being taken against tax defaulters, the problem is that these notices have been issued even in cases of small defaults, even in cases where the amounts involved are not too large. And unfortunately, recently, it seems that similar directions have also been issued to the field officers by the higher-ups, based on which several prosecution notices have been issued by the tax department, again in a mechanical manner, without qualitative analysis, to mop up the tax collection to meet higher targets. The criteria for initiation of prosecution has been enlarged, and an illustrative list would consist of non-filing of return of income or filing the return late, that is after the due date, or rather a belated return, cases where return of income is filed but the self-assessment tax has not been paid, disallowance made in the assessments are accepted by the taxpayers and not contested in appeal before the appellate authorities. And this is a dangerous one because often taxpayers do not contest in appeal primarily to buy peace and or to avoid the cost of litigation. Other instances where prosecution notices have been initiated are cases where penalty is levied, whether the taxpayer has challenged the levy or not, and failure to pay taxes deducted at source to the credit of the central government. So these are the cases where prosecution notices have been sent out by various tax officers across the country. And the reason for having this particular video focusing on the concept or on the issue of prosecution is that taxpayers and tax professionals of the country are worried. We are worried that the income tax department has started issuing large-scale notices to taxpayers across the country, and the prospect of being prosecuted and being put behind bars, whether it is 3 months or whether it is 7 years, and being faced with the prospect of a rigorous imprisonment has driven a sense of fear amongst taxpayers. We are only saying that the prosecution sections should be used only in very rare cases and not in the manner in which they are being presently used. We hope that the large-scale prosecution notices issued will be followed up to their logical conclusion only after due diligence, only in cases where the amounts involved are substantial and not in cases where the amounts involved are small or where the defaults are can be explained by the taxpayers and where the defaults are not willful. With this hope in mind, I sign off and hope that this particular video is useful. This is part of our citizens education program, and we hope that the common man pays attention to this video because defaults can be made by all of us. Human beings are prone to errors, and unfortunately those errors under Income Tax Act can land you behind bars. So take care, be careful, and do not neglect any of the sections of the Income Tax Act. Thank you and have a great day.